Bitcoin is at all-time highs, pushing nearly $100,000. But is Bitcoin about to blow? Well, today we're going to discuss a couple of factors that tell us what Bitcoin might be doing in the next little while, but also we'll discuss some of the benefits over the long run as to why investors are owning Bitcoin at this time. Welcome to the Smart Money Dumb Money Show. I'm your host, Keith Richards. I'm President and Chief Portfolio Manager of Valuetron Wealth Management. And I'm a technical analyst. And there's lots of stuff to talk about today, so let's get started. As noted, Bitcoin's at all-time highs. Let's take a look at the chart. Nearly $100,000. And look at the angle of that ascent. That looks pretty parabolic to me. I'm sure it does to you too. Now, parabolic moves means things have been moving very quickly. And remember, nothing lasts forever, so we're going to talk a little bit about that. This doesn't imply that I'm bearish on Bitcoin, because I'm actually long-term bullish, but I do think it's a little overbought, and I want to talk about some tools you can use on how to spot the points where you'll want to be buying Bitcoin and spot the points where you might want to be easing out. Before I get into the factors on how to track Bitcoin's movements and how to predict future movements on this asset, I want to give a little story. I got a comment in my last video, which was on oil and gas. You can see the link in the notes below. Now, one of the commenters asked, why would they buy oil and gas when they're making so much money on Bitcoin? Great question. In fact, I've been in this business for 35 years, and you can imagine the number of times I've heard this kind of question, whether it was on oil or gold or tech stocks or AI stocks, or you name it. It's a common question. So I just want to relate one little story as to why we need to diversify a portfolio even when there's an asset that looks highly attractive like Bitcoin. Let's go back to the year 2000. People will remember the tech bubble. Well, in ValueTrend, most of our clients come to us from referrals from existing happy clients. And I received a referral from a very good long-term client back in 2000. At the time, the stock du jour was Nortel. This stock could do no wrong. It was rising at an unbelievable pace. This particular referral that I received told me that he had 100% of his portfolio in Nortel. And he was trading, I think, at around $100 a share at the time. I told him that he should reduce his exposure to the stock by diversifying into things like consumer staples and banks and all that kind of thing. He decided he didn't want to do that. A couple of months later, I contacted this prospective new client and asked him if he had considered following my advice of diversifying his portfolio. And he said to me, and I will always remember this, if I had listened to you, my portfolio would have missed out on about 20% over the past 3 months. Remember, Nortel was going up like crazy. A few months later, I heard that he had still held the stock, even though Nortel, at that point, had reached its all-time high and fell like a brick. Let's take a look at the Nortel stock. It was right around here I was recommending that this particular individual diversify his portfolio. Not because I was predicting what was going to happen to Nortel, which was an eventual bankruptcy and a share price of 0, but I was saying that the stock was overbought and you don't want to have a portfolio of one stock. So, the rest is history. We can see on the chart, Nortel fell to 0, and apparently, according to my client who kept in touch with this man had held his Nortel stock all the way down. And that's another subject, because at ValueTrend, I teach courses and write books on how to get out of a stock when the trend is broken. Nevertheless, perhaps that offers some input on why we need to diversify and why one would not just own Bitcoin, in this case, as the only stock in their portfolio or only position in their portfolio and not look at anything else that may be underperforming it at this moment. Let's take a look at the Bitcoin chart. I use momentum indicators to tell me when stocks or securities such as Bitcoin, are starting to get a bit overbought. And this is the case with Bitcoin right now. Now, whenever we see overbought charts, it doesn't mean that effective immediately this chart or this security is about to fall. That's not the case. It's a warning sign. So let's take a look at the Bitcoin chart. I've drawn some blue lines on this chart showing where RSI, money flow, momentum, and stochastics, which are all price or money flow indicators that can indicate when prices are overbought or oversold. In 2021, you can see that momentum was very high and in fact overbought, and the price of Bitcoin reached a peak and fell for the better part of a year. In late 23, we saw a pause on Bitcoin after a high point on the 3 momentum indicators. And of course, in 2024, once again, we saw the momentum indicators and money flow indicator flashing an overbought signal. And sure enough, price on Bitcoin declined and remained relatively flat for the better part of 2024. Well, where are we today? As you can see, momentum is just getting into that point of an overbought status for Bitcoin, this after the parabolic move on the price of Bitcoin as it reached $100,000. Now again, as we just saw through history, just because momentum indicators are reaching overbought levels doesn't mean we sell. It does mean that it can be a heads up for a change into either a flat or downward movement on a security. Just a couple of other charts to look at right now to understand why we might want to own Bitcoin as part of a diversified portfolio, and then a couple of other clues as to how we can time the entry and exit of owning Bitcoin if you are so inclined to trade. So the first chart is, why would we look at Bitcoin to begin with as an investor and not necessarily a speculator? Well, as we can see on the chart here, Bitcoin, which is the black line, can often move in opposite directions as the S&P 500. So there are periods of time that Bitcoin and the S&P 500 are not correlated. And that can be a very good thing if one is trying to diversify your portfolio. Another asset class that doesn't always move in the same direction as Bitcoin is gold. Let's take a look at the Bitcoin gold chart. You can see here that gold, which is the red line, and Bitcoin, which is the black line, don't always move in the same direction. In fact, if we go to the bottom of this chart, this is a comparative relative strength line. You can see where Bitcoin has outperformed or underperformed gold. It's important to understand this relationship because the next chart I'm going to show you is going to give you clues as to when one should be owning gold versus Bitcoin. This is a chart of the relationship of Bitcoin to gold, and you can see that when Bitcoin trades too high versus the price of gold, it tends to see sharp reversals. So here we can see when Bitcoin got around 35 times the price of gold, it immediately reversed time after time. That is where we are right now. Recently, Bitcoin, in fact, hit around 38 times the price of gold. This is another factor that ties into the technical screen that I was showing you before with all the overbought momentum indicators. To me, this relationship and the ratio of Bitcoin to gold is about to shift into favoritism towards gold. Now, again, that may not happen overnight. It may take a few months to occur. But after you see such a strong movement on Bitcoin, the relationship shows us that that is a little bit overdone insofar as the price of Bitcoin to gold, and we're likely to see an underperformance by Bitcoin versus gold. So at some point, I know that Value Trend is becoming more interested in gold because of this peak or overbought status that we are seeing on Bitcoin. So, in summary, what we've learned today, we've learned that Bitcoin is at all-time highs and that it has some relationships to securities such as gold that can tell us when and if that price of Bitcoin may reverse. From what I'm seeing is that price momentum is very high for Bitcoin, and I'm also seeing that the relationship of gold to Bitcoin is favoring a shift out of Bitcoin and into gold over the coming months. Now, this is a very fluid relationship, and you can see that back and forth, but when you see an extreme on Bitcoin, as we're seeing right now, versus the price of gold, I think that it's time to start considering looking at gold as an alternative to Bitcoin. Nevertheless, I am very bullish over the long run for Bitcoin, and I think it has a real place as a diversification factor in a portfolio of many investors. I don't suggest putting all of your eggs in any basket, but of course, any security that can help you diversify against the risks of the stock market or currencies or gold can be a very valuable instrument in a diversified portfolio. Thanks for watching.